Testing. Testing 1, 2. Hey, Vinny. Awesome. Glad to hear the sound is working. That's always good. So we'll get started here in just a few minutes. We'll let the room fill up. We got about 50 people already, so we'll get this filled up to a few hundred, and then we'll get started. I'll put you on screen so you can kind of watch the markets trade for a few minutes. But it looks like everybody's good. Hey, Brian. Cat C. Awesome. The GOAT, yeah. I used to hate Tom Brady. I love Tom Brady now. The guy's amazing. Anyway. Yeah, the dip buyers still exist, and they should. We'll talk about that. Yeah, there's a lot that I'm going to be talking about today. So you got full view of the office right now. See all the junk around my desk. I have like 5 major projects going on. So should be a fun day. I've got an entire list of things that I want to talk about on the opening, and so we'll get going. So I'm going to go off screen here. Sounds like everything's working, so we'll go over and let me bring up a level 2 screen for you so you can watch the S&P trade here. There we go. I'll be back in just a few minutes, folks. Nice. Okay, this camera I have follows me around. So anyway, welcome everyone to the Kendall Report live stream. And there's a lot to talk about today. A lot of things that I want to cover, I think that are going to be significant going forward. And of course, you know what time it is. It is Runa time. I am not getting paid for this. If you haven't tried Runa, everybody thinks I'm popping a beer, just pop the Runa. This is about 1.5 of a cappuccino, so we're all ready to go. So lots going on today. We did see a pretty good decline. Basically a retest of some of the numbers that I talked about last week getting tested around 4086 and on the S&P. So the plan for today is I have all of this stuff I want to talk to you about. There's 3 pages of scribble notes that I put together, and there's a lot of things to talk about, so I'm probably going to go through that for an hour or so and unpack all those things that are on my mind. And this, as you folks know, these live streams are an opportunity for me to go into more depth of just about everything. So looks like our rooms are starting to fill up pretty good right now. Yeah, it's pretty expensive here actually, as well, somebody said. So, and it was interesting, I was explaining my messy office. I have so many projects going on. I'm afraid to move piles because I'll lose stuff, because I always tell everybody, I have a couple of nicknames. One is a mad scientist, the other one is the professor, those that know me fairly well. So I just basically get all over the board sometimes, and that's what happens there. So I have to watch when I wave my hand here, because my camera does things. So I'm going to zoom in for you folks, just like that. How's that for action? And so just a ton of things to talk about. And well, we got a few hundred people. I see a lot of comments on the channel. I just want to cover a couple house cleaning elements as far as that goes. As you know, this channel actually supports our software users, both institutional and our retail group that we're associated with. And you know, we're always trying to teach people how to manage portfolios and not be speculating. And when you get into a portfolio structure, it's much more dynamic, much better to control risk than trying to buy and sell indexes and trading Bitcoin, which we'll go through all that. And I do talk a lot about the perspective, but that's really what the channel's about, is about that. So I am going to pitch you right now. If you haven't tried the software, it is the middle of the month. It's under $50 for a couple of weeks to give it a shot. But I wouldn't want to go through this next cycle of markets, especially if we do get into a rollover without having these signals. And I'm just telling you, there's 16,000 of them, and that's all I'm going to do on the pitch. You can go to the Kendall the Kendall report /WaveTech. You guys see it on the screen, so that's enough of that. But I think it's important to understand what my goals are here. And people watch the videos. I don't normally put out any kind of individual recommendations, buy this, sell that, do those type of things. Just trying to give a perspective for those of you that are managing your money and things. And as I've said, it turns out these videos are valuable to quite a few people. So So here's some of the things that I want to accomplish today. I actually want to talk about something that I said going over the past several months. We're going to get into the dollar today. We're also going to be talking about the economy and some of the challenges going forward. And I think it's very interesting as we start to see just almost 6 months of a new administration. And now all of a sudden things are starting to tighten up very quickly. And that's why we continue to struggle right at that 4,200 level. I've talked about that, and I'll get through that here in a minute. A while back I told you folks, like back in November, that the 2020 easy money was over. It's going to get much harder from here. And it has gotten extremely harder to make money than it was in the previous cycle, which was the big reset and all of the money being pumped in by the Fed. Now there's some different stories going on. So let's get in and talk a little bit about the economy. We're seeing some pretty mixed numbers. I also want to address the housing numbers that came out because they're significant as well. But the economy is stalling all of a sudden. And we saw that with the last jobs report. There's still some metrics to come out that I think we're going to have to see to make a final judgment on this. But it does appear that the economy is stalling. So whatever the Fed did previously worked as far as getting the numbers and all of the markets back in order. But we still have, around 10 million people unemployed. And a lot of those folks don't have any real big prospect. So we're seeing the switch from, we'll call it the previous administration to the current administration. And we went from deregulation and low taxes to re-regulation and at least tax proposals right now. There's nothing been really implemented. This changes the entire picture. And it's sort of like having, we had this Ferrari, now we put a limiter on it, it'll only go 55. I always say it's the opposite of Sammy Hagar, if you know that song. I can't go 55. But loading the economy up right now with potential higher taxes, regulations, all types of things, and especially some of the regulations that are getting put out there may be based on economics. They're based on other things, other social things that are going on. So when you take and put heavy regulations and new taxes on an economy that has 10 million people unemployed, it's going to be a problem. Wow. Abbey Road, man, I'd rather you, you need to go and sign up for our software. That's like awesome, but you need to sign up with software. That's 2 months of software use, and you'll get all kinds of direct contact with us. So anyway, thank you, man. That's crazy. Thank you. Yeah, wow, that's awesome too. But I'd rather, man, seriously, I'd rather you get some real value and ongoing value. So do me a favor. I don't know you other than your handle. Send us an email to info@Kendall Report. I want to talk to you. So on a one-on-one basis. Thank you, though. Appreciate it. So let's talk about Janet Yellen. Okay, so Janet Yellen yesterday comes out and she's telling us that we need more unions. Everything needs to be unionized because that's going to help diversity and inclusion and all kinds of stuff. And I didn't know that was the Treasury's job, but it has become that. And somehow the words that rang in my head were "workers of the world unite." And if if you look that up, you'll find out what that doctrine is all about. And it's somewhat scary, but this is the thing that's going on because the folks that are in power right now, they have an agenda, and every administration has an agenda. There's no doubt. This one has a very specific agenda to look at social constraints and things. I'm not saying that's bad. Please don't say that's not what I'm saying here. What I'm saying though is that that's what they're focused on, and that's important to us as investors. And I talked a little bit about this last night, is that the probabilities of getting this infrastructure, $4 trillion happening, that's not going to happen. And will it be 600 billion? Will it be $1 trillion? That's what really is happening. And I think, we've been through this with, last fall with Congress not being able to get stimulus passed and just one thing after another. Hey, let's face it, it's the government. These guys are completely incapable of doing anything on it. And as far as efficiency goes, it's going to take them longer and they're never going to get there. Most of them are attorneys, so you know what that means. So as far as that goes, I've renamed, I've given a new nickname. I went from back in when Yellen was the chair of the Fed, I always called her grandma. And then she went from that, when she coming into the Treasury, fairy godmother, she was going to fix everything and spend all the money. Now I'm switching her over to the evil witch of the West. And why am I doing that? Because she is not doing the Treasury's job. She's doing a job of a lot of things, but there's this whole agenda that flows through the entire administration. Some people love it, some don't. I'm not judging that. I'm just telling you this is what we have to deal with as investors, and so we can determine what's likely to go on here. So my expectation is that it's very possible, maybe not in the month of June, but June and beyond, we could see unemployment start to tick up. I think the Fed's going to have trouble controlling and doing anything to stimulate the economy. You have to realize that the change in the mandate with the mask thing the other day by the CDC was a panic effort by the Biden administration and the CDC to try to get more people outdoors and get them to work, because they see what's going on in the backdrop of this economy, and it is just coming to a screeching halt. And that is just going to cause some really different movement in the markets than what we've been seeing. And so, a year ago, we were coming into the June highs, but we had a hot market. We don't have a hot market anymore. We have a lot of questions being asked, a lot of uncertainty being done. So this is going to be a continuing saga that isn't going to go away anytime soon. In fact, we could see this for 4 years of this stuff, and it's just a matter of, is there anything that will bump, and we'll get to that tipping point that I mentioned in last night's video where this thing just rolls over and does a big correction. That's certainly always a possibility. All right. So let's go to my next subject that I want to discuss. I'll get through this probably, all of these comments probably within a half hour. And I'll start taking some of these thoughts and ideas into the markets and how I see this playing out. And those of you who've been on the channel, I know there's a lot of names that have been around for a while. I just want to say that what I was talking about, the Princess of the Yen, Richard Werner wrote the book, and also there's a documentary out there. If you haven't watched it, it's worth watching. So I've been talking about it, that I think we're in Japan 1984. We still could be, but there's some challenges coming on, especially with the Dow. I've been in the camp. I talked about this in a video a few nights ago, but I've been in the camp that I believe that the Dow was going to firm up and move back to its 200-week moving average. I don't have the chart up right now. I'll go through it here shortly. But that's not what's happening. In fact, we're starting to press down to some critical levels, and it looks like we could see another maybe 5 to 7% decline, and it could get worse. At some stage, the system breaks if the Dow goes down too much. And my previous hypothesis, based on the Princes of the Yen, based on thinking that we're Japan 1984, is what happened is in Japan they expanded the money supply substantially, but the yen stayed stable and it actually appreciated in spite of that, and it gave a lot of purchasing power. And worth watching that entire hypothesis, and not even a hypothesis, but what actually happened. And Japan has been a model for a lot of central banks for a while because they were the first ones really to do QE and to do all this balance sheet spending on the central banks to try to keep the economy together. And they've actually done a pretty good job as far as keeping the economy together in Japan. So it is somewhat of a model from the standpoint of what people think they are, I guess, what they're following and what their expectations are. But the situation we're seeing right now is starting to get pretty tenuous. But my going back to that is my expectation was if we're there, we could see purchasing power and that the S&P would be maybe at 10,000, not 4,000, and that the markets and the S&P would be your inflation hedge. And I'm going to get through all this today. I've got 2.5 hours, so I'm just going to continue down this track. But what we're doing here is we're seeing gold start to come alive again. I've been talking about gold for a number of months, and I'll tie all this together because my expectation was that the Dow was going to appreciate and the gold was going to appreciate at the same time. Well, we're finally seeing that realign, which is more classical. And I know Christoph is on here. He was challenging me, I think, in that hypothesis a number of weeks ago. But what drives me is what's going on with the charts and what's going on. At the time, it was stable enough. It was hard to make that call. We're starting to see some signs, especially if we take out this 8,900 number that I mentioned in commentary the other night. Things are going to start to look a bit different. And then gold is going to even get more traction, ultimately above 1,900. But I'll save that so when I go through gold. But this whole scenario, if that happens, there's a couple initial things, and I'm just now putting the thoughts together on this stuff. So I'm giving you folks some preliminary thoughts as far as what's going on with the economy and the dollar and where we're going, because I haven't got confirmation of some of these things, but I like to talk about them a little bit ahead of time just so we all have some perspective and what we're likely to see. So theoretically, if the dollar doesn't go down a lot, but it goes down a bit, we could see that bid in the small cap and the mid caps come back in. That tends to do a little better when the dollar is a little weaker, those asset classes. We'll see how this plays out. If it goes too far, then it breaks everything. So right now I'm going to reserve that requirement. I'm actually on the final page, so we're getting through this stuff pretty quick. There's a couple triggers here. I could end up on a rant. But the inflation situation, so let's go there. So dollar's still holding. I'll go through the details here in the charts and cover that at the next level. But inflation is here. The Fed is telling us it's transitory, meaning it's temporary. I don't think it is. I made some comments, I think, last week, and I saw some rebuttals that I said that Europe is so closed down. I think this was Friday's brief video that I did. I did a quick live stream for 30 minutes on Friday's close. But as far as the economy is being closed, compared to Arizona, compared to Florida, everything's closed. And Texas, right? Those are states that are fully open, that have enough population. I know Arizona because I live in Arizona, so that I've seen. I can tell you it's pretty crazy around here, and very few people have been wearing masks around here for a while. So it's been pretty open from that viewpoint. But the point is, it's not about masks. It's not about that. It's about the opening of the world economies and the point of the supply chain shortages and the demands. It's really weird what people do when they get locked in their house and what they get attracted to and what they start buying. But the reality is that the supply chain is going to continue to be tight and probably get tighter. We're probably going to see intermittent shortages. situation on the East Coast with the gas line. That was obvious disruption by we'll call them cyber terrorists. That's not what I'm talking about here. I'm talking about pure demand for things, and we're going to continue to see these shortages. Ford has had issues with their trucks because they can't get enough chips. We all know about semi conductor shortages, all that stuff. And so all that happened. So I want to go to the final thing I'm going to talk about, then we're going to dig into the charts, is the housing situation. Just yesterday we saw housing starts come out at 1.56. They were expected at 1.7. So they missed quite a bit. It was almost, I think, a 9, almost 10% down from the previous month. And the other thing that on the other side, it's really the housing starts versus housing permits. Housing permits came in at 1.7, basically exactly where they thought the numbers would come in. So what happened there? Why is there so many more permits than there houses, housing starts? And I think this has a lot to do with some of the shortages in supply. Had the opportunity to talk to a local contractor the other day. In the area where I'm at is expanding very quickly. A lot of folks from California are moving to Arizona. A lot of them want to come up here in the mountains where it's not so hot. And there's some constraints with neighborhoods and just what's available up here in general. It's about 100 miles out of the Phoenix Valley. So and 20 degrees cooler. So that's what's attractive to this area on top of some other things. But the point is that he was telling me that window prices, not just lumber, not just 2x4, but window prices have almost quadrupled. Just about all key things that you need to build with are just through the roof. And I know that lumber has backed up about 10-15% recently. But that is just because the demand is slowing down because it's just not there. So that's what I think happened. The housing starts, I think it has some to do with supply chain constraints. That's why there were fewer actual starts. You can get a permit, but you can't start. And this gentleman was telling me that he's had to hold up 2 jobs because of supply. So that I know that's a micro view, taking it out to macro, but this is exactly what's going on in the economy. And this is going to start to affect the economy from production, from GDP, and every metric that we have. Anyway, so that's pretty much what I wanted to get in from a dialogue, and trying to get a perspective of where I'm coming from. And then when I start to go through some of these longer term charts, you're going to be able to see a little bit more of this. So we'll start off like I usually do, and from here, pretty good. Only about 25 minutes to get through that. So that's really good. So we'll see what we can get moving here. So let's go over to another screen here. And let's start to look at, excuse me 1 second here. Got to get my camera to adjust. So, okay. So what we look at, this is the S&P daily. We traded down just below. Thank you for the super chat. No, I have not, but I will get through Bitcoin here in just a few minutes. We're going to do the indices, interest rates, the dollar, and then Bitcoin. So it's probably about 25 minutes from now. So let's go ahead and we look at this chart here, and what you're going to see is that the market traded below the 40-day moving average. We went down to STX number. Let me put that on the screen so you can see it. And STX is 40.61, the low 40.55, so we traded just below that. We bounced back. We're now trading at 41 even, which is back to S2, between S2 and S1. Last night I thought we would at least get down to an S2 number, and we just blow through that, but we snapped back. The one thing I want to point out here, and I'm just going to get on full screen so I'm out of the way. One thing I want to point out is that if we look at the PPMs here we're not seeing any mass acceleration to the downside. So this is not probably the big rollover. It's still part of that sideways range that we're looking at from the standpoint of this consolidation. And you could argue that we've been in this since the beginning of April, maybe April 10th and beyond, has been part of this consolidation. And we'll take a look at the weekly chart here in a minute. But you can see the PPMs, they're not even in downtrend modes. They're just not there. The 40-period moving average, 4109, is going to be very close to what the 10-week moving average is. And that is pretty decent support. Last week we printed down to, I think, 40.29 was the low this day. Let me take a look. Yeah, 40.29.25. Today we got down to 55. I talked about last night the possibility of retesting some of these numbers, so we did that this morning. That was exactly what happened. So but the patterns that are unfolding, we're not seeing a big acceleration in anything. If we go to the weekly chart, what we're seeing here is the 10-period moving average, exactly 4,100. Last trade, 40.99 on the futures. That's going to be your big, what I like to call it as a demand line. It's up at 0.41, which tells you it is in an uptrend, and that value at 4,100 is going to be a key level to watch. And right now, there's only a 30% probability to close on that, under that, on a weekly basis. And even when it does close, if we're at a 0.30 or higher, it usually will rebound the following week. So this is not the type of pattern where we're going to get the big rollover, but certainly we could be just weeks away if we don't start to show some positive moves. Let's go over to SPX. I want to look at the cash and do the same analysis very quickly here. On the SPX, we're below the 40-period moving average, which is 41.17. So we need to get above that, but same situation as far as the PPMs go. And the PPMs are not accelerating. In fact, PPM 2 is trying to turn up PPM 3. I actually have a fourth PPM that I normally don't show on the channel, which is it's called a WaveTech 200. What it is a price pressure momentum indicator on a 200-day moving average. It really doesn't tell much. It's at a critical point, but we are seeing momentum starting to fall off. And those of you who have probably seen this presentation, I just want to re-center if it's the first time you're on the channel, so you can understand what these indicators are and what they do. But this is a real typical. They're not about divergences, but I talked about this. It's momentum precedes price, and we're even here. Almost all of these momentum indicators kicked in right in here at the end of March, and we got this little boost here. This is a short-term daily chart. Now we're seeing everything start to fade, but we're not in trend mode. Trend mode is anything under minus 0.25 on the downside, plus 0.25 on the upside. So this indicator is minus 0.15. This one's minus 3, and this one's still positive at 0.11. So we're not really getting into the trend mode here, but there is signs that we obviously have downward pressure right now. So the next several days, this is Wednesday, the next several days are going to be critical to understanding exactly what we're likely to do. So good news is I'm not going to be able to figure that out now, but the nightly videos will cover that. All right, so let's go to the weekly chart. Let's go to the weekly chart on the SPX, and I'm going to go right through weekly, right into monthly. The weekly, this is interesting because we've got the STX weekly is 40.62. We went down to 40.61. So we printed the STX weekly. So we've been at the extreme. And I talked about this on Sunday night's video, that what we saw last week, we saw the market dip down well below the STX number, but rallied back and closed around S3. And now what we're seeing again, even after the rebound and a little bit of follow through early in the week, now we're seeing this thing come back down and printing down into this lower end of the zone. So S2, S3 is probably going to be around where this thing's going to hang out, 41.18, 40.90, and we've already printed the extreme for the week, but the PPMs are still positive, plus 0.39. You can see that value over here on the right. 0.49 and 0.49, 0.27, even the 200-day moving average is in trend mode. So everything is in trend mode on an intermediate modeling basis. And this is something that I talk a lot about when you do, we started going what I call bottom up. And bottom up is when you start with the daily chart, go to the weekly, and then go to monthly, which I'm going to do next. And you start to tie through everything. I'm going to, when I finish this part, I'm going to go over to TradingView, and I'll show you my longer term wave count. I'm going to keep that in perspective as well. The PPM stands for price pressure momentum. So that's a great question I just saw come on the line. So here is, here's the explanation. Each one of these indicators measure the rate of change or the percent change of a moving average. The other two lines are first and second derivatives of those, which tell you when the probabilities are likely to change. Otherwise, when they start to cross down in negative, it starts to tell you that there's a potential movement, and inside of the WaveTech models, there's a lot of variables that look for when trends are likely to break down and when they're likely to move forward. So the PPMs just give you the perspective of what the probabilities are around a moving average. Probably, I could almost make the statement just about everybody uses moving averages. I spent my entire career, started studying moving averages in 1983 actually, and we developed these indicators in 1984. And I've used them my entire career, and these indicators have been helpful in helping to manage through institutions over roughly $275 billion over the last 20 years. And I've also used these inside of bank trading rooms, hedge funds, other places that I've been. And so they're very useful in understanding trends and understanding when moving averages will hold and when they don't. So long explanation, but that's it. Okay, so let's go to monthly. And there is, by the way, I forget who asked that question, EVH. I think that was you. Yeah, so there is a video on the channel. There's a section called Understanding My Process. There's several videos there that will help you to understand some of the jargon and things that I use on the channel. So here we are at monthly, and from here we're going to go on S&P. We're going to go to monthly to a quarterly graph, and we're going to take a big 30,000 foot view of the markets. So what we're seeing here on a monthly is interesting. The S2, this is very interesting. S2 is 40.60, and we've been so far 40.56. We've done an S2 monthly. On the upside, R1 is 42.38. This market grid is actually uses a volatility range look back of a 3 and 5 bar volatility look back, and then it calculates Fibonacci relationships on every bar. That's what these dots are on the screen. So what you look at here on a monthly, we've had an R1 S2. Is this month over? It's hard to say. We're basically mid-month. So we'll see how this, whether we recover or do we go to the next level, which is down below the 4,000 handle down into 39.97 would be the next deal. But let's look at the PPMs. Just talking about PPMs in depth here is what happens is the PPM 1 is a plus 2.25. I said a few minutes ago that the value of plus 0.25 is a trend. Well, this is 2.25, so 7 times bigger than what you need. PPM 2, 1.67, PPM 3, 1.14. All this tells us is it's about the moving averages that I just met. But what it tells us is 37.28 is a 10-month moving average. There is less, that's basically almost a zero probability for it to go below that level. If the market were to have a massive sell-off and you saw 37.28, you could buy it. You could buy it and then blindfold yourself and look at it next month, and you probably would have made money. We're not going to get there. It's not in play right now. But what happens normally is, if the market starts to go into further sideways range for a number of months, we'll see these moving averages, and especially the 10-month moving average, start to catch up with what's going on. But these are very robust trends, and we're a long ways from like the big rollover and the end of the world and the end of things that Dalio likes to talk about, the debt cycle and everything that he likes to talk about. So let's go there. And I think the first chart I got up here, this is the unemployment rate. I'm going to stay on the S&P. I'll come back to this here in just a second. Okay, so what I've got on the screen right now is a very long-term chart. Matter of fact, this chart, if I go back even further, goes back to, I think, 1877, okay? So we're just looking at, this is basically coming in to the 1932 lows of the Great Depression, counting out this pattern that's set up. And so we have this, what I would call a grand super cycle, wave 5 going on right now. And everybody from Bob Prechter, who brought Elliott wave into prominence back in the 80s, to anybody that's done the Elliott wave back in, coming into 1997 or so, that was in 2000, that was the end of the end. Actually, even going back into previous years of this, of the development of these trends, everybody wants to pick wave 5 of 5 of 5. And this is where I came up with the long-term count here. This is each bar here is 3 months or 1 quarter. So this is really an interesting chart. I'm still, just for a side note, I'm still working on the TradingView channel that I have. I've made a couple updates. I haven't gotten regular there yet. There's some things that we're working on in the background. I have a meeting actually tomorrow about TradingView with somebody that's helping us to, another coder type that's helping us to get some things going. So I'm looking forward to that. But this way, what I do have us in a grand super cycle, I do have us in a fifth wave. We also, on a next level down, have a fifth wave. So everything, we're getting to that point where there's a potential wave 5 of 5 of 5. The hard part is trying to determine where the ultimate high is. And I'm going to go back to some calculations on TradeStation here in a minute. We don't have all the indicators that I use built into TradingView just yet. And many of these indicators I told you will be available. So I am Kendall. If you go to TradingView, you want to find me, I am Kendall Report, all one word. And you can follow me there, and you'll get some updates when things happen. But as far as this wave count goes, we're really looking at that final phase, but there is most likely a lot to the upside yet before we're going to get to that place. And that's just as confirmed. We were just looking at the monthly graph, but I want you to look at the PPMs. These are the WaveTech PPMs right here, and they have insane values on a quarterly basis: 3.24, 2.76, and 1.26. And these indicators are suggesting we're a long ways from actually hitting any kind of major top of any sort. And these read a little bit different, but the same thing. I was talking about how this is actually a crazy analysis to look at. And I'm just going to go ahead and do this. It's just one of those things that's happening real time. So I want to draw in. I just talked about this momentum. Look in the far left. I'm drawing some lines here. That momentum precedes the trend, and this is the way these indicators work. Basically, they spike up, they come back into the first, second derivatives, and then virtually go into, I will stop it here, virtually go into what I call a trend maintenance mode, okay? I'm going to back these up just a little bit. So what happens is you get this big ramp up. That was 1932 to 37. That quarterly momentum, that trend mode that was signaled back then, stayed in play all the way into the 1964 highs, roughly in here. This is what was in play. And then we started to get this corrective phase. I'm just going to draw a box around this right now. Then we get into this corrective phase, and then we start to see the momentum kick in again, not as big as previous, but there is momentum, and then the sideways trend. Same formations happen with these indicators all the time. And so this was the next phase, getting us up into this high. And now what we've got is another reset, and we're seeing these things come into the trend mode. This is probably better drawn here. And then you've got some trend mode here. So based on this, we're potentially years away from anything that looks like a major top. And I know these are hard to contemplate, but the underestimating what the Fed, what the government is currently willing to do is pretty difficult to measure. It's a guess at best there, right? So what happens with this stuff is you really have to step back and realize that this one bar is 3 months, so it's going to take multiple months to roll over these indicators to get to a point where this market's going to roll over. So you'd have to still classify me as a secular bull market is still in play that goes back to 2009. I know all kinds of people are telling you why it can't continue, why everything. I'm just reading the tea leaves here. I'm reading the PPMs and going through the entire analysis. So I took you from a daily chart all the way to a quarterly. We applied some, and you can get this wave count, by the way. It's on my TradingView channel right now. So if you go there, like I said, Kendall report, you can see this, and I'm glad to see some dialogue around this and dispute my wave count. And the numbers, the way I drew this in, I'm new to TradingView, just trying to get everything to line up so you could see it. That's not where I think the high is. It's just where the wave count is. So criticize me if you want to challenge my wave count. That's fine. I think there could be some good dialogue around that. So feel free to go there, and I'll try to look for that if you're currently watching and want to look at that and have some ideas, comments, whatever you want to do. But once again, it's at TradingView/Kendall report, I think is how you'll find it. Okay. So let's go from here. I know I'd spent a lot of time on the S&P, but all of these trends, for the most part, if we put on any index, it's going to have a similar profile that I just went through on the S&P. Now I focus in on the S&P just because a lot of our institutional clients use that as a benchmark for a lot of things that they're doing. Not a lot of people benchmark to the NASDAQ or anything like that. It's just become a typical benchmark out there. So that's a good thing. So let's go ahead and let's go back to TradeStation. I do want to show you one more thing on this S&P before we move on. We have an indicator that I developed a number of years ago, and it'll calculate out what the Fibonacci targets are. And right now, on a weekly basis, move this down on this chart over on the left, the high target is 4605, 5100, 5400. I caught a lot of shit for my thumbnail markets to go to 4400. Still think that's in the cards. Everything I just showed you, all these trends are still in play. All you're seeing is some of the noise, day-to-day, week-to-week noise inside of a trend. And sometimes these things become real material. There's some folks, it's pretty easy to be right in the markets because you virtually fade everybody out there. I wouldn't fade me though. That's kind of funny. But it's kind of funny because I used to work at a large firm out of Chicago, commodity firm, and one of the principals of the firm, and I used to work in the research, they used to fade their own research guys. So on the cattle guys, they'd say, hey, go long cattle at so-and-so. They tell all of our reps out in the field, we had about 5,000 reps, and they would tell everybody to, they would set up a trade, and this guy would actually fade him. So if they said buy, this internal desk would actually sell on a house account against the research. I don't think that was, I won't tell you the firm. That firm's not in business anymore, unfortunately. I'd probably still be there if they were. But they would fade them. So when I came in as an analyst, they started fading me, and I was killing them. So be careful. I'm wrong at times, but especially that's why we put the software out there so you guys can actually get the actual signals from the process. And my biggest line that I've said for years is process over attitude and opinion, because attitudes and opinions keep you in a market when you should be out and out when you should be in. That's why you need to have a process. That's why Bob Kendall personally, got out of the emotional trading and got into quantitative and structured trading, I call it. So, okay. So, but these targets are real, and these targets came out for the first time going back to October 23rd of 2020. And so I put these out on the channel. It's a new Fibonacci projections rendered. That was that week. And you want to, boy, the trolls were out in big time. This is October. Everybody was still talking about retesting the lows last year. And, you know, no way this thing's going to 4,600. Well, we're not 4,600, but we have been 42. And we're still, as you just saw in the trend, we're still within those trend constraints, and there's still a positive trend there. So the short-term trends, even the short-term trends aren't accelerating, as I showed you. All right, I know that was long. Appreciate your patience, and but I think there's a lot of value in these thoughts that I just put out there, and a lot of construction there. So let's go on to the NASDAQ. And we're going to use the NASDAQ futures. I usually cover the futures. They're coming back big time. Actually, they're only down 25 handles. Haven't looked at the markets for a while. Yeah, they've come back pretty good. So let's start with this chart here. And one of the things that I want you to know. Hang on one second here. I just got it. All I'm doing, I'm not waving at you folks. I'm turning my camera back on, okay? So the whole point of on the NASDAQ is a much different configuration. I mean, look at this thing's only down 650 now. It just popped as I brought it up, actually. We're probably going to go positive here. Matter of fact, let's do something since this is dynamic. Yeah, look at this pop. Just since I brought this up, we're getting this big pop. Let me get off screen so I can go full screen. In fact, I'm going to zoom in on this thing. You see this 5-minute chart, and it just popped here. And it was interesting because on a 5-minute chart, all this stuff that I run, this is PPMs that just exploded. Look at all 4 of them. There's even a 200 period moving average on a 5-minute chart here, right? And this thing just exploded out of here. And look at that, we're positive 15 handles right now. I mean, this thing is vertical. Let's watch this for a few more minutes. This is kind of cool. We caught this moment. And here we are, S&P now 4106, only down 16 handles on the day. So that's exactly what I'm talking about. We're in this sideways range. Buy the dippers. I made the comment before we started today that the buy the dippers is appropriate, and because these trends are not broken and we're still in this consolidation. So when you see these lower end of these ranges, it's pretty good. So we had a low of 12,954. Yeah, so okay, it's fading. Let's go one more level lower. Let's go down to 1-minute graph so you can see this just a little more dynamic. And I'm going to pull that off the screen there, so you can see how the PPM just exploded with this move up. So now we're going to see a consolidation up here. We're only up about between, we'll call it unchanged, up $4 is so much. It's moving so fast you can't even quote it. So the other thing that came in here, which is interesting, right at that high bar, we got a cycle event come in. I can't wait till I can get all these tools out to you folks on TradingView. I think it's going to be really exciting for everyone. But you can see the PPM one is still expanding, but we got that cycle. So we're probably going to see some consolidation here. We'll find out if we just fall back in. That was just explosion. I don't know if any of you have, if there's any news or something out there. You guys, I'm sitting here just focused on this, so I'm not seeing any news or anything out there. I guess we could go over here and just, these are news headlines. I don't see anything. 20-year auction, no one cares. Yeah, I don't see anything out there. Okay. So anyway, that was kind of an exciting moment. Oh, the minutes. Good call. Yep. Good call. I forgot those were coming out today. What else is new, right? So there's a theory we used to do always when you get a report like that and you get the big surge, you usually fade it. There'll be a secondary run up. If it doesn't make a new high, you fade it for a quick scalp trade. It's an old floor technique that we used to do. So that's definitely might apply right here where this thing will come back in. So let me get back into the analysis I was going to do of the NASDAQ. So I'll go back full screen here just so you can see that. So we're going to go to the daily. I mean, the daily ranges are so tight. Let me expand this out just so we can see it just a little bit better, but really isn't going to help a lot. But we're trading back, trying to get back toward that 10 period moving average. It's 13,322, high 13,216. We got up to 13,231. We look at the market grid. Let me bring that back on screen here for today. Look at the market grid. 13,281 was R1. So I mentioned in last night's video, I thought we'd get an R1 S2. Well, we had a low of 12,954. We basically did an S3. So we did get down below that 13 handle and then reverse from there. Now we're trading up toward the R1. So we're within the constraints. We did an R1. We definitely printed the S2 and almost made S3 here. So definitely if you'd have been just playing some intraday charts on these numbers, you probably could have captured that pretty good. Okay, so let's go to the weekly graph here. There's not a lot here on the NASDAQ, and this is what I've been trying to discuss on the daily videos, is NASDAQ, we've got a weekly 0.22 plus PPM1, PPM2, PPM2 is at 0.19, 0.42, and even the PPM 200 is a 0.41. So we're in trend mode across the board. And there's some upward objectives that are here. I was just talking to you about these numbers. Let me bring them up on the table here so you can see them. 15,156, 16,200. There was some much larger projections, but a lot of times what will happen based on a pattern, there's a pattern recognition tool that I built many, many years ago, literally back in 1994. This indicator was built back in 94, and it basically recognizes patterns, high-low patterns, and then projects a Fibonacci range off of that pattern. So what we're seeing there, that's where these numbers coming from. Previously, it was suggesting 16,500 range. That's still in play, but now it's the medium one at 16,286. So it got fine-tuned a little bit. And typically we'll get to the cyan or the yellow line will get into that mid number. So from a Fibonacci projection point, there's still more up. The trend is still up. We've got the 10 and 21 period moving averages right in the range. We're looking at last trade 13,234. We're up 24 on the NASDAQ now, so that it looks like it took out that high. So the moving averages 13,509, 13,310. We're trading in between these numbers. And if we can get back above the 10 period moving average, that's going to be quite positive. These are weekly numbers, by the way. Okay. So let's just go out to monthly. I'm going to try to get through this. I'm into an hour and I'm still in the indexes. So apologize, but there's just a lot. I knew it was going to be a lot to talk about today. Yeah, this is probably more significant. We're seeing the PPMs. What I believe is happening here, I'm going to draw this in very quickly. I talked a bit ago about this where the momentum ramps up, and it's interesting that these all went at the same time. So what's the next phase? We come back in, all these numbers come back in. That's where the phase we're in now, and then we get in the trend maintenance mode. These indicators are going to just waffle back and forth here on all of these. Same thing here. This will follow in. And what happens then, there's three moving averages, the 40-week, the 21, and these are simple averages. I know a lot of folks like to use exponential, and that's fine. It doesn't matter. It's what I use. But what I'm using them for is pattern recognition. WaveTech itself is that term, and the process is a combination of using moving averages, the PPMs to confirm wave counts and trending modes. That's what it's about. So this was put in place in 1984, literally in Northern California, where I lived at the time, with myself and a former professor at University of Michigan. We came up with these concepts, and I've just took them forward. I called Bill back in the early 90s and told him I was going to go commercial with this if he had any interest, and felt like he had anything coming, and he just said, I don't even use them anymore. So this just ended up to be my life work, following these things. So what's happening with these PPMs is the trajectory, because this is a monthly, is likely to continue down this path. So these moving averages and the trend are going to continue down this path. So you can make some assumptions around this, that the prices are going to continue to move along that as long as certain values stay in place on these PPMs. There's some probability map that is out there for these, so you understand. And I told you earlier that 0.25 or greater is a trend. Well, these are 1.9, 2.5, 1.7, and 1.3 on these indicators. So there's a lot of upward momentum, a lot of upward pressure. PPM stands for price pressure momentum. So what it's telling us is that the price pressure is moving up, and it's likely to continue up in this mode as long as certain other elements happen, like the PPMs go negative. There's a minimum value that they need to hold when they're in trend maintenance mode, and that's around 0.15. So we're a long ways from getting down there. So these PPMs could come in quite a bit, still be in trend mode, still suggest that these trajectories of this long-term trend is going to be in place. So that's what this whole analysis is about when I'm talking about all this stuff. Yeah, I see Red Rockers talking about Mr. Market. We used to call it just the market gods. And a buddy of mine used to always say when come back on camera. A buddy of mine used to always say, "Don't ever let the market gods hear you celebrating a position. If you're celebrating," he used to always say, "you need to be celebrating, like SELL. You better be selling out of taking profits or partial, because you got to convince the market gods that you're legit. You're doing something about it, so they can't screw you around." He said, if you're ever really feeling good about a trade, you should be selling some of it. Maybe not all of it, but you probably should scale it back. So think about that. I'm trying to find something that I want to share with you folks, and it's making me crazy. I went through a lot of papers. I had an old presentation that I did for many years called How to Become a High Percentage Trader. And one of the things that I talk about a lot is the ability for you to get into psychology and your own personal psychology. I hope I find this. If not, I'm going to have to try to recreate it. But it'd be so nice, because I used to do this thing for, I think, about 10 years, was part of my presentation. So I know it, but it would be nice to have all the notes. And I had my hand on them in this office in the last 6 months. So I know they exist. Anyway, so, but yeah, so exactly, sell a Brady, exactly. Yeah, just, I don't know why, but it happens. If I look at this NASDAQ now, this was the fade job I was telling you guys about. Let me bring it back up here real quick. But this thing has turned south, and let's go back to a 1 minute graph here. Yeah, so very, very interesting. Let me get rid of a couple things so we can see this. Look what happened here. This thing got this formation I call a dragon head. It followed through. It got an RTX sell signal and then faded it right back into the 40-day moving average, almost down to the, not 40-day, but 40-period moving average on the NASDAQ. So there was a big fade. I talked about this just a few minutes ago. And sometimes these live streams, we get activity like this, end up to be educational events, not planned. But this rally here is what I was talking about. This was the Fed minute announcement, got that rally, and then you wait, they retest the highs, that we'll call this bar right here the retest, and then you fade them. And that was your trade. That was 100 handles on the NASDAQ on a short-term chart. But that fade trade happens a lot around these big reports where you get the big reaction and then you get that fade trade, and it's only 5-10 minutes. It's not something, sometimes you might be able to get something much bigger, but we're all the way down 48 handles. We're down 0.37, and S&P's back to 4089. We were printing, I think, 4108 maybe. So this is just a classic, so I wanted to make sure you guys pointed that out. And you literally can use any indicators you're using to find this type of scenario. But yeah, it's always the fade trade. I used to ride the train into San Francisco to the trading floor back in the early 90s, and early 90s, 91, 92. And it's funny, I used to steal Jason's scooter and take his scooter down to the train station because it was easier to get on there. So anyway, it was easy. I could park right up front if I was running late. So I think he got mad at me. He might be able to tell you folks that. But anyway, I used to steal his scooter so I could park really close. But anyway, there was a point in a time where I would get on the train at I think it was 5:05 in the morning heading to San Francisco, and the reports would come out at 5:30, whatever time it was, right before there was a big tunnel, and I had the old brick phone, Wall Street style, the old Motorola brick phone, and I was talking to guys on the floor on the way in, and I would do the fade trade, come through the tunnel, which was about a minute and a half, the Coldigot Tunnel, coming in, looking at the San Francisco Bay as you came in towards the Golden Gate and all that stuff. And by that time, the trade was over or close to it, and I would stay on the phone with them and even buy or sell it back. It was pretty cool. But that's kind of, and I had a old quote. What do they call it? Like a Quotron or something. It was a handheld device where you could get live quotes. This was before, this was a long time ago. So, but I had a quote machine. I think it was by e-signal or something, and it was a radio quote machine, and who knows what kind of delay, but I traded off that thing going into the tunnel. It was fun. Anyway, side story. Yeah, 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 Honda Elite 150. Yeah, yeah, I love that scooter too. Jay got in an accident and almost got killed on that stupid thing. So, anyway, it was what, 16. I get a call at the office. He got hit on that darn thing. Anyway, so obviously he's still here. Anyway, yeah. So let's get back into line. A little story there. Some people like the stories, some don't, but they're part. I'm actually talked to a really good friend of mine that I just want to do like a podcast, and we just tell old floor stories and all these crazy stories from back in the literally back in the late 70s and 80s. There's some crazy stories, and I have some old friends that have lived through it's one of those things where you can't make this shit up because it's real. So who in the hell is Tupac? And what are you guys doing to me now? Oh my God. Are we talking about the rapper? I'm going to go off screen now if you guys keep this up. I'll never be able to show my face in public. Oh my gosh. All right. So yeah, so here we are on the NASDAQ. So I think I covered that pretty good. Let's go to Russell real quick and just take a look what's going on there. And this will be the Russell cash. Of course, this is a 1 minute, but same fade trade here, right? The same thing. Yeah, I think it would be fun to do. You know what? I really want to do that. That would be so much fun. I've got like 4 buddies, including my buddy Charles Cottle, who's been on the show before. He was one of the founders of Thinkorswim, and Tops Sosnoff was an old client of mine actually. Him and Charles and those guys started Thinkorswim way back when. So there's tons of stories. Tony, all those guys. You wouldn't believe all the stories, but I've got one buddy in particular that's spent a lot of years on the Chicago Mercantile that's got the most insane, funniest stories I've ever heard in my life. So, that would be fun to do. Have like 4 or 5 guys that would be just so much fun. I can't even tell you. So anyway, that I want to do that now. I want to do it right now. Okay, I'm done. Let's go on to analysis here. So I talked a lot about this in the past, where we get the this sideways movement forever. I mean, this goes back to February on the Russell, right? You can just see this thing's flatlined. There's been some trades in there, but when you look at it from a bigger scale and just look at it looking back to February, this market's went nowhere. And I'm going to show you the spread in a minute. And the spread reflects that way. The NASDAQ clawed back. Tech stocks came back in pretty good. The Russell just stayed flat. And this goes back to my early scenario, what I was talking about a few minutes ago, in as far as what's going on with the, with the spreads and the Dow. If the Dow weakens a bit, but not too much, then it could bring in these small caps and mid caps into play. For right now, we're talking, flat line. Even the decline in the Dow during the same period of time as when the Dow has been declining. So let's go and take a look at the weekly, because this is like looking at an EKG. Here we go. So weekly, the trends have finally started to fade. We are in right now. This is very interesting. The weekly Russell, and this is the cash, is rolled over to the point where PPM1 is a minus 0.76. PPM2 is a plus 3.8. PPM3 0.78. So this thing is starting to roll over, and if we do not, I would say in the next 2 weeks, get back above the 10-week moving average, then this could roll down as low as this 40-week moving average down to 1960. So we need to get above 2248. It's not a tall order to get there. That's certainly very easy to do, but if we don't get above that really quick, we're going to set the tone for a further decline. And I'm sure if the Russell's declining, we'll probably see a lot of those things come on. So I suspect that someone said, why is the market fading? I think the market's fading just due to there was a reaction here. I'm just bringing this back up. This is the level 2 on the E-minis, and they just sold them all the way off. We printed up 23's high, but the high that we got on that little run was 750 was the high on that run. So we went back to that level. So let's get back into this chart here, because I think what is important to understand is that maybe this tells us the Dow is going to continue. I'm trying to put this as a new dialogue, a new scenario for me to start to unpack, and I'm watching some of the components, trying to look for a confirmation, and I'm not being you folks should know, especially going through last year with me, I'm not bashful in telling you what I think is going to happen. Don't really care about trolls. I do my analysis, and this, I just can't put my finger on what's happening here, but there is a rotation going on, and I'm going to bring up the spread chart next so you can see that. Let's go ahead and go to that. Thank you, Super Donkey. You're steady, man. I will look at AMC in just a few minutes, and let me get through this stuff. So. Okay, let's do one more thing. Let's look at the weekly, or the monthly, I'm sorry. So monthly is setting up, I remember talking about this last week. This monthly is setting up this high level consolidation. The monthly PPMs are really strong. It's going to take about 2 months for this thing to catch up. Maybe one will get down toward the STX levels on this level. Take a look at this. Right now, we're trading just below 2213 is the S1 number. We're trading 2132, so we're down almost to S2. We're actually below S2 almost to S3 at 2095 on a monthly basis. So what I expect here is a consolidation where we should stay above this 10-period moving average. It's going up about 80 handles per month. So it's going to be right at 2,000 the beginning of June. In July, it will be basically around 2,100. And it goes to that trajectory and everything I talked a few minutes ago about that, is that the markets are likely to continue along those projection lines for a while, and the PPMs are telling us there's virtually no probability for it to drop below that 10-month moving average at this time. All right, let's go to the spread, because I think that's going to help to reveal some stuff here. And I've talked a little bit about this spread. I just want to draw in a couple of things that I think are important to understand. And I think what we just went through on the NASDAQ still having the positive bias, the Russell having a negative bias, this may be telling some of the story. And I always tell you folks, when I do these live streams, I'm doing real-time analysis with you. This isn't anything I thought up ahead of time, other than I put a few thoughts down on the opening comments that I do. But this is something I discussed in a video last week. And so we've got this trend that's unfolding, and I'm going to go to the next level here in a minute. I told you that I thought we would top out somewhere here where we'd come up. We may have already topped out. We see the spread start to move down, then we could just end up in a range, which is what the NASDAQ charts or the Russell monthly chart is telling us. We're going to get locked in a range. But if the NASDAQ gets any traction, starts to move up towards some of its highs, which looks like it's possible, this spread is going to go to the next level down. And now all of a sudden we're going to start to retrace, back. I could run some retracement numbers here, I think, here in a second. But we're going to start to retrace back to key levels on that move up. And if that happens, that probably tells us there's other things going on, and from a structural standpoint in the markets and what we've been seeing for a while. So let me just see if I can do a Fibonacci range. I'm just curious here. You can't see the numbers, but I will tell you what they are. They're pretty. Let's see if I can move this over closer. Yeah, so we're looking at least moving down to this middle line here, where I've already drawn back into this consolidation here and the potential of coming down to the next level. So I would say this spread is likely to come in quite a bit more, which tells you two things are going to happen. And those two things that are going to happen are actually going to be the NASDAQ is going to stay flat in a range, and the Russell is going to stay flat in a range, and the NASDAQ will start to get a little traction and pull the spread back in. And there's just nothing material here that we're going to be able to expect to see the small cap value, that whole range of from small caps to mid cap asset classes, and from a look at a value growth, that value is going to come much in play as well. All those are going to be pretty neutral from asset classes. Okay, let's move on. Let's go Quickly, we're going to get through interest rates now. I'm going to take us back to a daily view, go full screen here. Okay, here we go. Interest rates. We're at 1.68 on the 10-year. We're actually breaking above this little volatility range. We're likely to get an RTXL signal, which means we'll just go stable. We'll go sideways above 164. I've talked about that spike that we got back on the 7th, that wasn't going to last, so we should see that. And you can see PPMs are starting to accelerate, 0.61, 0.36, 0.11. And this is really important to understand because these are accelerating trends, and it's really off the map strong on the weekly chart. And I've talked a lot about this. I still expect this. There's two levels I'm going to show you here in a minute. One is going to come off the monthly graph off of this thing. The other one will be off this chart. And the 200-week moving average right now is 1.95. I believe that's still a target. The PPMs are in that trend maintenance mode that I talked about earlier. So we're definitely seeing this thing stay in the range as far as this trajectory goes. The PPM 1 is at a plus 0.31. PPM 2 is huge, which is up 2.59. This was the cyan line, which is at 1.43, but that's changing at about 5 basis points per week. So that's going to catch up with the action here in a couple weeks, and that's going to be really significant. The last thing I'll look at here on the monthly is the same number. This is what I was talking about on the monthly. Let me bring up the scale so you can see this. 1.859 is going to be the monthly 40-week moving average. 1.85, 1.95 is the 200-week. That's going to be your upward target range for this thing. And I think it takes a move above 1.72, 1.74 on the 10-year to start to scare people and start to bring in this inflationary expectation at the next level. I think that is exactly what, that's exactly from my viewpoint, what I think is going to happen with the interest rates. And of course, these numbers, if we get this type of stuff, is going to affect the Dow, which I'm going to cover next. And so from this point, we go Dow, and then we're going to go into the, we're actually going to do the metals. So we're going to do interest rates, Dow, gold, and I'm going to cover silver because I know I told somebody on the channel I would do that on a live stream today, so I'll do that. And then we're on to Bitcoin and some of this other stuff that's out there, some of the cryptos. Okay, so let's go ahead and the Dow is bouncing back after yesterday. I've got the monthly graph up here. Let's start with the daily real quick. Let me move some things around. Yeah, so we're seeing this big downtrend. It's interesting. We're not in trend mode on the daily chart, so we still have some support, and this is why I've been hesitant to proclaim the end of the Dow as we know it. It was funny. I almost want to make the theme song anymore on the channel, the REM song, The End of the World as We Know It. That seems pretty appropriate for a YouTube channel, I think, in this current world that we live in. So But these trends on the Dow are significant from the standpoint that we do have a downtrend. PPMs are minus 0.13, minus 0.6. I'm in the way of some of these numbers, so let me get off screen so you can see those. But there's not a lot of downward acceleration on the short-term basis or on the daily charts. So let's go to the weekly chart so we can start to see exactly what's going on as far as this goes. I talked about these weekly cycles that came in. These dots up here show that there's a weekly cycle event that happened, and that was on 4/2 and then ended up to be a high. As far as downward surge right now on the intermediate, we don't have that either yet, and this is why I'm hesitant to claim that the Japan 1984 scenario is done and off the books. Okay, that's still not the case, and the pattern that's unfolding here is really still looking like it's trying to hold. We need some more downward pressure. We need to get, I mentioned a number, well, I don't have it right in front of me, but I put it on the channel. I think it's 89.27. That's your key breakdown point. So we're holding above that key support. We get below that, then I'm looking at 87.85. That happens, then we'll see acceleration across the board. We'll start to see some serious acceleration. At the moment, we're not seeing that yet. The PPMs are neutral on an intermediate basis. And like I said, it's going to take some more weakness, and even the daily charts aren't illustrating the big downward momentum. Let's go to monthly, because there is some stuff here to look at that I think it is going to be the primary driver. A lot of times when I'm doing analysis, I will talk about what I call the dominant trend that is controlling everything. So one of the mistakes that I think a lot of folks make when you're trading is you don't have full context of what markets are in what particular situations. So hang on. Let me, I zoomed out too far, sorry. Anyway, so what we're getting here is this pattern that is starting to accelerate. We have a minus 0.37 on the monthly, PPM 1, PPM 2, minus 0.44. These are both secular downtrends. So this is what I've been expecting to see, this thing flatten out, and we are starting to see that. So this is why we've got that one last thing to hang on to. This 86.93 number down here is the 200-month moving average, and that's your drop dead. We get below that, it's Katie bar the door. The dollar will come apart, and with people like Yellen and other folks around the administration, including Jay Powell and all these guys, I have said before on the channel that I believe that they will defend the dollar at all costs. I still believe that. If they don't, then we go from, this inflationary Japan 1984 scenario to something much different, a debasement of the currency and a massive hyperinflation. And those are the two camps. And I don't see that decision has been made yet. And I let the markets make the decisions, not me. I could have an opinion about where I think they're going to go, but in the end, the markets make the decision, and I'll make that call when I see it. Right now, I don't have the confirmations of that. And I would rather try to be a little late to this party. As far as our modeling goes and all that stuff, we've already been in the right position for the most part, or no position on the dollar itself. And that is the case. I think Jay could correct me, But on the WaveTech training yesterday, I think for the most part, we've got about most of our strategies out there right now that are a combination of short and long term, long or intermediate term, are anywhere from about 40 to 60+% in cash. And that tells us there's a lot of protection being taken on within our portfolio management system. On an intermediate level, it's more like 20 to 30, okay? But there is some cash protection being taken. And not to, I guess, opportunity to troll Kathy Wood, but the problem with like things like ARC, they claim they can go to 65% invested or 35% in cash. They're not doing that. They're doubling, tripling, quadrupling down. That's why they had a 40%, nearly a 40% drop off of their high. Instead of adjusting risk, they added risk. And this is the opposite of the theory that WaveTech and Portfolio Expert do. When risk shows up, we adjust the risk and we lower our exposure. That makes total sense, right? That's why you're supposed to do it. And then once the market's bottom, you start to add in and make bets again and start to push the equity curve. You can't push an equity curve. You know, I think in my Twitter account, I think I put some reference to ARK Invest, and it was catching, it had a market chart, but it had a falling knife, and the knife went through the hand. You don't want to try to catch, there's no point in those type of trades. You know, cheap seems cheap, but goes to my lithograph that I think I brought up last week, as it had the guy bought low, sold lower. So there's what you want to do is buy when a trend, when the market has formulated a bottom, and then when you start to see a developing trend, if you can get on that goal on that train early on, that's the best. And you want to make sure you have confirmed bottoms, you have different elements there, and you're going to take less risk when you do that. And then when you add that into, like in our environment where we're doing multiple, you might have 15, 20, maybe 30 items inside of a portfolio, all doing and thinking like that. It adds some really serious dynamics. It helps you to control the risk as well as being able to participate when these markets start to move. So that's exactly what we're seeing here, as we've got the secular trends down on the Dow, intermediate flat to slightly down, and then the daily basically flat to down. So it's at that pivot point. It won't take much to do it. And I believe the monthly charts that we're looking at here are going to be the dominant chart in the pattern. Okay. Just going to try to adjust this screen just a little bit. Trying to get myself out of the way. Okay. That might be a touch better. Might be a little better there so you can see this stuff. But this, that's pretty much it for the Dow. So let's do gold. Gold is something I cover every day, and I went through all the way through the monthly graph, and I still don't think we're at that point. I talked about gold. Let me back up. This is a monthly graph. Let's go back to the daily. And going back, I remember specifically saying this on a video. If you see anything that prints under 1700, 16 anything, buy gold, because it's going to be very cheap. That's going to, in hindsight, going to look cheap. And that was right over here. We actually printed at 1677 low. That was when this was happening, those two sessions. So these are going to be bargains. This thing is not breaking down. It's going to hold here, and we're going to start to see this upward slope start to happen, which is what we see here. And that's important configuration to start with. And I also said we're going to head toward the 200-day moving average, which at the time seemed somewhat silly. That number is 18, right now, 1858, 59. It was 1860 plus at the time. it's still coming down a little bit. But all of this stuff is coming into play, and this sets up the tone for the next level of the weekly. So I'm going to go pretty quick on gold since I cover it every night anyway on the channel. So we're back above the 40. We're actually at a 0.80 on the weekly now. This is exactly what I was talking about. This is the final stage of the bottoming process on a monthly basis. We could see one more pullback, maybe even pull back into 1820s, maybe back to the 21 period moving average, something like that, which is around, it's right at 1800. So that's certainly a possibility, and that would be healthy because we still have, as I go to the monthly graph, we still have this to deal with, is this monthly graph. And you could call this a dragon head, and typically this formation resolves itself in the previous direction, which would tell you that we'll start to move higher and ultimately will challenge this high. This is a nearest futures chart here, so there are some different numbers here. It's not a cash chart, but we're looking at that 2110 number back in 831. That was back when Peter Schiff finally had his self-esteem restored, only to watch it drop back to 16 something. But the next level will be that will start to move up and challenge this level. And I don't have any way of drawing this, but I do think but it's more complex than I wanted to get into. But I do believe there's a swing objective that would suggest just rough numbers. Let me come up with a number. This is very rough. Don't hold me to it. Yeah, we're looking at maybe 2300 on gold. And why would that happen? Well, possibly a big decline, the dollar breaks down, and we go from in inflation, but a positive type 1984 scenario in Japan to a debasement of the currency. We're going to get that answer, I believe, in the next couple quarters. I think we've got some folks that are willing, people running the government right now, are willing to do anything to try to put their agenda out there, and they really don't care about the consequences. I don't think they've thought through everything. I think in hindsight they'll be going, whoa, we probably should have thought that one through, but maybe it works too. So we're going to get to find that out. But gold is setting up, is telling us that it's going to be, we probably should have thought through that a little better before we did it. All right, so I promised to do silver. I'm going to do silver, and then we're moving on to the cryptos. So these are the mini Runas. So they're only a half size. So I'm on Runa 2 for this show. We've got about 45 minutes to go. Oh, that was fun. Fortunately, I have a towel here because the Runa spilled. Anyway, nice. At least it didn't get in my keyboard, right? Okay, folks. So look at silver. This is daily silver. Silver is in a pretty good position. We got a 0.40, 0.31, 0.23. I haven't really looked at this market for a while, and I don't follow it real close. I'm going to go to the weekly just see what that looks like. Just not the same robust view that we have on gold, but it's positive. We do have the PPMs 0.65 plus 0.30 and 0.12, so that's a good thing. And they are in trend maintenance mode, but the trends are, especially on the intermediate and longer term, are somewhat flat. Let's take a look at the monthly. Yeah, monthly, actually, when you get down to the monthly level, and this is why I always suggest that you have that perspective, is that this monthly chart is actually really bullish. This got a dragon head, looks like it wants to go up. The spike high of the Wall Street bets hype was 30.27, and we've continued to stay in this range. Now the 10-month moving average is in play. That number is 25.71, the low 25.85 this month. So, and that trajectory is going to keep us moving higher. So it looks like silver has a good chance of going higher. Let's just see if there's any Fibonacci targets or anything around that I haven't looked at since I really haven't covered this thing. Okay, there are some Fibonacci targets. Let me bring that on screen so you can see that. Fibonacci targets on the upside are 30.09, 32.50, and 33.99. So that would be your next level off of the intermediate charts from that standpoint. See if there's anything on a short-term level since we didn't look at that. Yeah, we're actually meeting the short-term targets where we're seeing those targets 27, 79, 28. So we're right into that above that min target 28, 78. So we're getting right into that range right now. We were just a couple of days ago. We actually printed up at the, let me get that number, 28.90 was the high, 28.57, 29.62. So we satisfied that short term, and now we're backing off of that. But longer term, it looks pretty good. All right, are you guys ready for cryptos? Okay, here we go. Bitcoin. I do have the ability to look at some other coins. I'll have to go to TradingView, but I do have that ability to do that. So let's just see if I can get through this first. One of the things that I showed last night is the sell signal on, we got a sell. Let me bring up the models on this. We got a sell signal right here. Let me put it on screen. And somebody made a comment. That's why you subscribe, I guess. You want this data. You can see short at 50,458, 38,000. The low's been down to 30. So, I mean, this thing just dumped out. That was probably one of the more climactic bottoms that we've seen. We're starting to get a reversal. This is the daily chart. So we went through the 200-day moving average, which was, I covered this last night, 35,297. The low was 30,041. I mean, if you had to buy Bitcoin at 30,000, right? That's a 50% discount off of the highs, right? So that's a pretty big number. As far as this short trade goes, I don't think that's something you should do now. That was something you should have done at 50,000, not at 30, not at 38,000. So what my expectation would be is that we should hold this 200-day moving average. I think everybody and their brothers got that number on their radar screen. We should hold. We'll see if we can set up some kind of consolidation. There's not going to be a lot here on Bitcoin, more than I covered last night. We did trade all the way down below the 40-week moving average, which was at 32,313. I just mentioned we had a low of 30,041, and on an intraday basis, intra-week basis, we did get a sell signal on this thing at 42,000, and the original buy on this was at 11,000. So 11,134. I remember I did the video back in the day when I got that signal, and it was the video was Bitcoin to 23,000. Well, that was 1/3 of the way of where it was going. I didn't update that, but this is where, from a modeling, weekly modeling standpoint, that's where this thing is out at, is at the 40,906. So it's now in a neutral mode on an intermediate basis. There's not enough data here for a monthly to look at, but let's take a look. I think probably Ether was probably the most pumped up out there, and that thing just came apart. I guess between Dogecoin and Ether and Elon Musk tweets, it's kind of hard to be in cryptos right now. Everybody's I think they're pissed at Elon for his tweets right now. But if we look at, this is some pretty crazy numbers, because we got up just a few weeks ago to 43.84, and then we printed overnight so far, we printed down to 1860. So more than a 50%. This is huge carnage. You've been around cryptos, this stuff happens, and it happens usually somewhat out of nowhere on that level. So let's go to weekly. I'm not sure there's anything here on this one. Yeah, down to the 21-week moving average, 1964 low, 1860, trying to bounce. But this is big stuff here. This is the type of situation happens that it takes literally months to repair this thing from a technical viewpoint. So you're not going to get a lot of, there's going to be trades in here on a short-term basis, but this thing is not going to form any intermediate trends for a while. And I'm talking maybe 4 to 6 months that you're going to be range bound. The goal, if you're trading cryptos, what you're going to want to do is figure the ranges that you're likely to be locked into, and possibly that'll be determined by some of the market grid numbers that come out. That's something that we'll probably define this as we come into next week, but this week is just it's a disaster, blow up, whatever you have there. So we're a half hour out from the close. I went through a lot of information. Somebody asked, how many hours do I sleep? Believe it or not, I used to do 6. I've now upped it between 7 and 8. Last night was 7 and change. So I just sleep in a cycle whenever that cycle happens. Okay. Yeah, typically I probably go to bed at 4 a.m. Eastern time. So that's kind of my range. That's why I have Jay and others around me to make sure everything's running. Yeah, I guess somebody said look at 2017 and the pullbacks. Yeah, and it recovered in weeks. It can recover, What I'm talking about here is trends, okay? A recovery is not a trend. A recovery is just a snap back into probably where the value belongs. The value for Ether or for Bitcoin isn't where they're trading right now. It's probably in, 45 to 50, 55 handle. That's where you recover back to. But what I'm talking about is recovering from a technical standpoint, setting up the next level for a new trend, for new ATHs, all-time new highs, that type of scenario. That's going to take a while, especially on an intermediate level. Daily, it doesn't matter. These charts have all been broken and they take a while to fix. Rebounding back to a value is another thing. That's what we'll find out probably over the next 2 weeks, what that value is. And so I agree with you that we get those snapback rallies, but I'm talking about a trend like what we just went through, that I was just discussing, going back into almost the last year, going back into August or June of last year on any of these cryptos. And a lot of this stuff is just kind of coming to a head. And that actually is a really good point for me to make is I'm going to come up full screen. I'll try to do a couple stocks, but this is a really good point because this is where the markets are in general. What we just saw in the cryptos, you got, now I have a love-hate for Twitter, right? Twitter is just, it's kind of an abusive platform, right? People they do what they do, but it's also can be very annoying. But there's people that out there that think cryptos are a joke and they love this moment. They love the moment that somebody might have bought this thing and lost money and they're laughing at people. And, meanwhile, there's plenty of stocks that have lost 20, 30, 50% of their values in a couple of days, but you don't hear the same thing. So it's always this social environment that we live in that these things happen. But this is my point where I'm trying to go here. Is the point is that we are at a particular point in time after the pandemic. There's still elements of that out there. After all this stuff that we'll call it the last better part of 18 months, right? 16, 18 months. Everything the planet's been through has reconfigured so many things and it's changed. And so what's happening is reality is coming back into the markets. This is what I was talking about in my opening comments today, that it's going to be much harder to get the economy to do what they want to do. It's one thing in changing asset prices by the Fed pumping money in and doing everything that we've all enjoyed in the last year. I suspect that last year for our modeling and our software was one of the best years ever. I remember 2003, 1998 was a really good year in the dot-com thing. I think our maximum portfolio in 2000 did 179% return. We had portfolios last year in 250, 350% returns, right? Never seen anything like that. May never see anything like that again. It was such a unique point in time. And that's why when I talk to you folks about all this stuff, is that back in November, I proclaimed that the easy money was over. And now it's even becoming more obvious with having this current drop in the cryptos. There's just a lot of things going on. And are we going to get that in stocks? Maybe. I don't see it based on just go back and watch the replay. That's not what I'm seeing on the markets, but we're seeing a lot of things that have happened or that are, I guess, reflecting the mania of last year. Everybody taking stimulus checks and opening Webull and opening up the Robinhood accounts and every brokerage account in the world. I mean, the number of players in the markets have, I don't even know the number. So I would say it's probably quadrupled. I know from the daily volume prior in the fall of 2019, actually in the winter of 2019, we would do about 1.5 billion, and we might spike to 2 billion on big days on total volume on all exchanges. Now we're pressed 6, 8, 12, 14 billion. So there's so many more players in the markets. There's a lot of things that happen. But the reflection from the cryptos are telling us exactly what they should be telling us, is that a lot of this mania is getting rebalanced and a lot of things need to be rethought. And I think from the Federal Reserve down, everybody's going to have to rethink everything. And it's, yeah, so while I was covering these other markets, I really haven't looked at some of the indices, and they're pretty much stabilized. They didn't go all the way back down. The NASDAQ was down almost 70. It's back only down 14 right now, so they're trying to make another run on all that. So let's do a couple things. I know you folks, I've seen Tesla come up a couple times. I'll go through and cover a few stocks. Give me some. I'm not sure how many I'll get through, but I'm going to do probably Tesla and Apple at least. Yeah, it's interesting. When I get to this phase of these live streams, the old man is getting, these are really, really brutal to do. And but I enjoy them nonetheless. It gives me an opportunity to really get deep into a lot of issues. Okay. All right, I got a few. You can put them out there. I'll see what I can get to here in a minute. Yeah, so I've got another meeting to prepare for after I finish this, so I need to take a 15-minute break and get on things. So I'm going to be fairly hard stop shortly after the hour, okay, just so you know. So we got 30 more minutes. So let's take a look. Let's go over full screen, take a look at some of these things out here. Let's start with Tesla. I saw that Burberry, the big short guy, is short Tesla. I don't know where he's short at, but he's short some pretty big dollars. And I think it's fairly legit to be short this stock. This is the weekly. There's a couple little dots you may not be able to see, but I'm going to bring them up on screen here. But the low target, the minimum low target right now, and we did get a cycle top come in on 423, and we've been down. We're looking at PPMs minus 2.0, so we could call it a 200, minus 0.68, minus 9.6. I'm sorry, positive 9.6 on PPM 3, which is at the 40-period moving average. So there is some support hanging around this number right here. This is the weekly graph. Probably just do weekly on this. Around 603. We're obviously trading well below that, but the very first target on this thing is 419. And that just tells you that you don't want to be anywhere around ARC K, because that thing basically trades like Tesla, sometimes even worse. So Tesla looks like potential down to 419. I don't think it can get to 200-week moving average. That's somewhat crazy. Let's take a look at a monthly. I don't think there's a lot of data. Yeah, so we're actually trading through the 10-month moving average, and it's up at 477. So this is, I'm glad I brought this up. This is going to be your number around that 600 number is going to be what I call the demand line. So you may get a little bit below it on a monthly basis. We look at the market grid here. We're looking at $546 has been the low. we're trading between S3 and STX on the monthly. This stock is one of them on our daily market grid, by the way. So you have all these numbers to trade off of. The 10-week moving average right now is, like I said, 599. It's up big numbers, but we're seeing the PPMs cut through everything. So we're seeing a massive failing of the momentum. So if we do hold the lower end of the market grid, we're going to set up some kind of consolidation at these levels. Okay, let's move on. I'm going to stick to probably weekly charts on most of this stuff. I know another favorite is NEO, and NEO is actually not too bad a shape here. We actually have a negative PPM 3.15, 1.9, but we're probably close to the support levels. We're trading below the 40 period moving average. It's going to try to rebound back to 39, but this is a dangerous stock. This fits in the category with a lot of stuff. I don't think anyone asked for it. Oh, somebody just asked for it. That's how funny is this. But like PLTR, it's stuck in the pattern. I've actually was talking about this getting down to $15, and overnight, in that crazy overnight session the other day, we actually printed overnight down to 16. I think on the day session we got down to 1706, but it had traded about $1 lower on that big down day that was on the 11th. And from a daily standpoint, we're still got negative PPMs. There's, this stock, this is one of them I probably hate because of Twitter. But if we go to the weekly, I don't have enough to calculate that. Let me let me bring something up over here, folks. Let me bring up, I'm bringing up a portfolio expert, and let's put, I'm just going to bring up this full graph. At least I can get the PPMs on our platform. Yeah, so the PPMs are slightly negative on the weekly. There's just a downward slope. We're trading just above that 40-day moving average. So there's just not a lot there on this stock. Probably another way overpriced IPO. I know they've been around for a while, but since they've IPO'd, it's been a little bit different. Okay, let's go to Amazon, and I still have this Fibonacci projection tool on. What I want to show you here is that this thing is right at these weekly moving averages, attempting to roll over PPM. The good news is PPM1 is at a plus 0.40. It's going to keep us around that 3260. It's going to want to join up, get up there. 3224, 3204 are the moving averages in the pattern. Looking at the market grid, this is a weekly. We're looking at 3174 S1. We've had a low of 3184. So far, we've traded almost an R2, S1 R2 on this thing. And it's not very exciting. I think this stock is also part of this reconfiguration. And if I'm right about employment and the economy starting to stall a little bit here, that is going to be really, really interesting. So let's go to the next one. I'm just trying to get through some stuff here. Go to Apple, very similar. A lot of these top-end tech stocks look the same. There's major resistance on Apple, 128.94. It's going to be tough to get through that number. This is a weekly graph. So we're looking at PPM1 is positive. There's kind of a mixed picture here. 127.50, 128, 129 is going to be major resistance. 123, there is some support there, but the chart is starting to roll over. We could come back and test some of these levels, maybe a Fibonacci projection back down toward this low 116. We're probably pretty close, probably 120, 119. But there's no trends here. There's nothing really to grab onto. And that's the issue that I've been talking about on this same, on the whole show. We're going to do Exxon, and this is, I want to cover this because last week I did cover the crude, and I still think crude is going to head up toward 68 or higher. Looking at Exxon, there's good support. I'm going to call it 53.27. There's a decent uptrend on an intermediate level, but I think this 200-week moving average up here at 66.50 is going to be the top end of this thing. So look for a range on this stock. You probably, if you're trading it, of 54.10 to the 66 level on the upside would be the extremes. Yeah, so Victor's asking what stock to buy and hold. Wouldn't have a clue. Never bought and held anything. So wrong guy. That's the one thing that I see Real Vision asking these really stupid questions. If you were trying to make 5,000% on a market, what would you buy? I mean, really? So I don't buy and hold. I never have. I always thought that was a joke. But you have to understand my background coming from trading floors and trading desk and high volume environments that, you don't fall in love with anything. In fact, one of my favorite lines back in the 80s was, if it doesn't expire, I don't own it. So the expiration of an option or a futures forces your hand to do something, even if it's a roll. But I've always been a trader for my whole life. All right, let's just keep going. Here's CCJ. We did get a weekly, I think I talked about this last week, got a weekly RXT sell on the 7th. We went sideways. We're sideways again. Probably next week we're going to have a chance for this thing to try to move up, but I think it's going to be a high-level consolidation. It's nice PPMs on this thing, 1.3, 1.13, 1.72 and 1.65, and so you got a nice trajectory. 17.5 is a big number here on the 10, and if we look at just for this is the weekly graph. If I just look at the expectations for this week, S1 1915, so we basically went a touch below S1. On the upside 54, we had almost an R2. So for a week, this thing's probably going to stabilize in here, but this is most likely a very high level consolidation, and the range projected extreme ranges are 1750 to 2182. You can see the grid here, and this grid is going to be fairly flat. So if you write these numbers down, these should be numbers you'll be able to trade around we go through next week, maybe for another week, is this thing should, based on what's happening here, this thing should, as far as the market grid, should stay completely flat. What time are we getting to be? 15 more minutes. There's Arch Resources, nice looking chart actually. Looking at PPM1 plus 1.08, 1.44, nice trends. Trading toward the upper end of the weekly range right now. 56.24 is R3. We've been 55.86. Just a touch. We're trading between R2, R3 right now. So that is likely to be continuation. Bear with me 1 second, folks. Okay. All right. I'm going to do two things. I'm going to do American Airlines. I'm going to maybe touch on the airlines here. This thing has just been consolidating here, not really going around. I'm going to go over to our portfolio expert, and I'm going to go to our portfolio page here, and I'm going to go to Wave Tech, and I'm going to, you know what, I'm going to log out of there for a second. I'm going to go. So I'm just going to go off screen so I can put my username password in. So what I want to show you on this thing here. Okay, one of the things you can do with our Portfolio Expert platform, you can actually log into WaveTech at the same time. When this is where the market grid is released every day. And let's go to, I want to go to the Portfolio Manager, and the reason why I want to do this is I want to show you the Buffett airline strategy, right? So last year, this is the weekly models running. So it's up 25.8%. It owns all of the airlines right now. We look at the open positions. You can see we own American Airlines from December 7th on the intermediate. It's up 42%. Allegiant, you can see all the numbers here. The big trader was Alaska. That's always been one of the better patterns for one reason or another. That's been one of the most profitable traders from the standpoint here. But this is what this thing currently looks like from that viewpoint. If I go back to our portfolio manager and I go to the airline strategy, we, on a short-term basis, we only own one of the airlines right now. And that is right now we go into the open positions and take that back. Do we not own one? Oh, I see why. It's actually, there's an exit. So it exited. So we don't own anything. It was an exit for actually, I take that back. There's a new buy. So if we go to orders, you see we're buying Delta this morning. So we bought Delta this morning. And so that's why it was showing up as one. So we've got a new buy on Delta, and other than that, all of these positions, we look at the summary of this thing, we're looking at percent invested will be 17%. So we're making big bets. But that portfolio did 102% last year. It's only up 13 this year. And I think it's going to be interesting if I'm right about the scenario that's happening here from the standpoint of the all of the models. What we're going to see is right from the standpoint from the economy slowing down. It's going to be interesting to see what kind of traction, because the airlines, you look at TSA and some of the airlines activity, they're up substantially from where they were. So there's definitely some cash flow, but like with anything and everything that got shut down in the last year, it takes a while to get things back normalized and to get things to work again. So let's go back to TradeStation here. And as I look at the weekly chart here, the PPMs are somewhat negative. We still own them all. You saw the open positions on our models. And so we still own, full out own on an intermediate basis, all of the airlines. There's 9 of them that's in there, including Boeing. So I won't have time with 9 minutes to go to cover many of these, but there's definitely definitely the case. And as far as all of the airlines are in an intermediate basis, are still in a good uptrend. Like I said, I think it's ALK is Alaska. Yeah, you can see it's gotten well above its 200-week moving average, and so that's been a big play. This was this was a big winner last year too. They made a lot of money, and the name of those portfolios are Buffett. I think Buffett Airlines. When Buffett sold the airlines, I did a video. It's on the channel. Look back, I think in last May it was. I went in and we put all the models on the airlines, and we were playing the airlines while Warren was pouting that he didn't get a special deal from the government on bonds and guaranteed deals. So that's usually how he trades, by the way. He's always looking for a sweetheart deal from the government, especially if you go back to the Goldman Sachs bonds and some of the other stuff that he did, Wells Fargo. That's all part of that stuff. He's now selling out a lot of these old Wells Fargo, but those are all sweetheart deals that they had the backstop of the government. I wish you and I could trade the same way, where we could get a guarantee from the U.S. government. We weren't going to lose any money. We could make a lot of money, I bet. All right, 7 minutes to go. See what else I got written down. I think we've looked at this one before. BNGO. I would try to look at UPS. That one will be interesting, actually. Yeah, this is a tough one. I think I looked at this last week. It was not that long ago, a penny stock. Don't know anything about it, but it does look like you have some support along this 40-week moving average, 447, probably sandwiched between 447 and 665. There's nothing on PPMs or anything to figure out there. But yeah, let's take a look at UPS. Big mover. I'm going to go out here just a bit. Yeah, so things are still getting shipped by UPS, right? They're making some money. We did get a monthly RXT sell but just like we did over here, we got one, and then we got the second one. So it doesn't look like we're gonna get an RTX sell this month. So maybe a sideways range. We're gonna call it. It should stall here. This is pretty. We're seeing PPM1 start to roll over, but the numbers are insane. 4.31, 3.36, and 1.76. So these are very, very big numbers. And just tells you that trajectory is still going to keep up. So the bottom line is UPS is in a big uptrend. So we got to look at FedEx, same kind of scenario. So the shipping guys, all these shortfalls, all this constraint on the system are definitely working, and you can see this 10-week moving average is just slicing up through this pattern. So we got about 4 minutes to go here. Let's go and focus in on the close of the market. Back to 4107. I'm going to go over another page here for a second. Just look at some of these other indexes. NASDAQ up 4 handles. It's interesting. The TQs, SQs are both flat on the session. So I guess you could have sold the SQs and bought the TQs down this morning. Did pretty good. Let's go and take a look at something here. Yeah, everything kind of moved around that Fed report, and that is definitely the case from that standpoint. So this is down to a 1 minute graph. We're going to go to the Qs here again. Yeah, so this was that retracement, that rally that we got earlier in the session, way over here. Hang on. Yeah, this was the pop from the Fed right over here where I put the cursor. And then we got the sell-off, and now we're trying to go back and retest those highs of the session. And it looks like we're going to get a decent bid coming into the close. E-mini's down 16 handles now. So we're above 4,100. I talked about those numbers earlier, that 4,100 is the magic number on the S&P. So we're back above that. So as disastrous as this morning felt, we really didn't get a lot of follow through. Let's go over to the level 2, watch this thing close. So we're seeing a bit of a bid, 4108 on the futures. Still printing up 1050. This is the final minute. So we got a nice bid coming in close, so a lot of short covering. Yeah, I think EVH, my early analysis was that there is no big acceleration coming down. Market's going to stay in this choppy range. There's no doubt. We printed 40.50 again. Here we are at 41.11 on the close. Got a bid in the final 30 seconds or so. Here's 12.50. That was it. Back to 9. We still got, there it is. That's the bell right there. So as always, that last 2 minutes and the 2 minutes after the cash closes is important. 1250 was the high. Let's see here. Actually printed 13. Now we're printing 1350. So there's still some buying after the cash close, which tells you that the books weren't squared up real well, and there's some futures buying going on here. We'll see how this thing settles out, but at least sorry. Yeah, so not a lot of movement here. We're trading right at this level. So I'm just going to come back on screen. Just want to thank everybody for coming today. I thought my appointment was at 2. It's at 1. So I'm going to have to jump off here. It's pretty critical for me to get on this call, but we basically finished the day up at the higher end of the range, down 10 handles. Let's take a look real quick. I just want to look at the numbers. I'll tell you what they are here. NASDAQ futures up 14 handles, and the Russell finished down the worst. It lagged. It goes along the lines of what I talked about in the analysis. So just want to thank everybody for coming today, spending time with me, and letting me ramble on about the markets. It's always really good to spend time with everybody. So thanks again. Don't forget to subscribe, hit the like button, and you really should check out the software. It's mid-month. It's prorated, so you can get a couple of weeks for not a lot of money, like $45 or something right now. So I'll put that on screen so you guys can see that, and have a wonderful day. And yeah, just go to www.kendallreport.com/wavetech, and that's where you do it. So thanks again for everything.